Good morning, everyone. Thank you for joining us this morning. My name is Ash Shanab, and I am the Commercial Director for the EMEA region here at RFI Global. Today, we have the third episode of our business banking series. The first episode, we discussed optimizing the opportunities to meet SME needs. In the second episode, we talked about the future of SME payment ecosystem. And today we'll talk about revolutionizing SME banking and unveiling the surge in FinTech adoption. With me today, I have Hubert Petka, who is our Group Head of Insights. He will be presenting us with some insights, and then we will have a Q&A session. For those of you who are joining us for the first time and maybe not very familiar with RFI Global, we are an insight partner. We support 400 plus financial services and payments institutions globally. We speak to 500,000 consumers, 250,000 businesses, and 100,000, 20,000 merchants globally every year. We ask them everything about their usage, attitudes, and future intentions towards banking, wealth, and payment. And as a result of this, we have an enormous primary database that we can tap into and come back to you with answers. We have a number of ongoing studies, one of which is the SME Banking study. This study runs across 10 markets from the US to Asia Pac to Europe. We cover about 1,000 SMEs every year. So the insights will be coming directly from there. Without further ado, I will hand you over to Hubert, but I will also say that please feel free to post your questions throughout the session, and don't worry about taking screenshots because the recordings will be sent to you after the session. So thank you for joining again, and over to you, Hubert.
Thank you, Ashraf, and hi, everyone. Thank you very much for joining us this morning. So I will take the next 20 or so minutes to just shed some light on banking behavior of businesses in the UK and how the advanced digitalization of channel enabled fintechs to take ground in the market and really gain a huge momentum among SMEs across the UK. So I am aware that the definition of SME does vary from one institution to the other and across different industry bodies. The one we're using in the presentation today covers all the businesses starting from pretty much no revenue of new businesses going up to 50 million pounds. So when we look at how businesses start, and I think this is a good really segue to what I'll be talking in the second part of the presentation, when we start discussing issues related to the emergence of this new players in the market. The key thing really that enabled this is the growing digitalization of channels and how businesses bank. When we look at this over the last couple of years, so we know that online banking has been available to businesses for a number of years now, for over a decade. Mobile banking, we see a thing that consumers have been using also for over a decade. But if you look at capabilities in that space for SMEs, it's only the last couple of years really that the capabilities have been enhanced quite substantially. And if you look at how businesses bank, so the two channels here really emerging quite strongly when we look at the weekly usage, online banking and mobile banking. It's interesting to see that online is still ahead of mobile. We did see some momentum loss for online banking over the last couple of years, but it is really still the go-to channel for SMEs in the market. And I think there are a few reasons behind this. So I think online banking still offers the convenience to SMEs they need, the speed of execution they often look for as well. But there's this perception, and it's not dissimilar actually among consumers, that online still does offer better capability. The size of the screen that online provides as well, when we speak to businesses, they often feel it's easier, more intuitive to interact through online as well. So I think that's why online has really remained the top channel used on a weekly basis. Mobile, if you look at this, we've seen some increases over the last couple of years. So it was around 35% between 2020 and 2021, rising to 42% in recent years. This level of digitalization of channel behavior among businesses in the UK is actually pretty solid if we compare it to other markets around the world. So looking at mobile banking here in particular, that 42%, so 2 in 5 businesses using mobile banking apps on a weekly basis, compares to 36% globally. So the UK is ahead, which is quite interesting insight, because if you look at the similar data, equivalent data, in consumer space, although the adoption of mobile is really high among consumers, it tends to be low in the UK than in some other markets, both in continental Europe, but also in much of the emerging world. The other channels we look at here, RMs and branches, used still by businesses, but obviously not used regularly as much as digital channels. The other question we often get asked as well by our clients in the market is around how this preference and interactions with digital vary across the different sizes of businesses. And looking at the data that we have, I think the key takeaway is that if you look at the businesses of different sizes, of different maturity level, the digital channels are used pretty much universally and to an equal extent. But I think the key difference for larger businesses is that they will use more different channels on a regular basis. So if you look at things like RMs, phone banking, and branches, they use much more regularly among larger businesses than they are among smaller businesses. And I think a lot of this data is really reflected in channel preference. So if you look at the headline data here, we can see that about 3 in 4 businesses in the UK now prefer to bank digitally. So 3/4, an increase of about 6% of the last 3 years. So the number stood at 69% back in 2020. And online is quite substantially ahead of mobile. So 38% to 21%. I think related to what I mentioned on the previous slide, this perception of better capability, better user experience as well among businesses. Data that it's in a sharp contrast to what we see in the consumer space, where mobile is now quite substantially ahead of online. One other thing here I wanted to bring, it's a dimension across the different sizes of the businesses. So, if you look at the headline number, 3 in 4, but there are some quite strongly pronounced nuances across different sizes. So it's 75% is really fueled by small businesses, which are quite happy to interact purely and solely through digital channels. But if you look at larger businesses, there's often a stronger preference to use RMs, non-digital channels as well. So though still it is a digital they prefer to bank with, and they needs are more complex, and so are the preferences as well. I did speak briefly about what we feel fueled this digital channel increase over the last couple of years. I mean, it will come as no surprise when we say that it's mainly down to ease of use, convenience, speed of execution. So the same things that are driving digital uptake across all of the different markets, all different segments as well, so consumers, SMEs, they're all the same. It's all to do with convenience, speed. So, when you're building those channels, when you're developing new capabilities, it's always really important to strike the right balance between features and functionality and convenience of use, speed of use, intuitiveness of the channel as well. And this appetite for digital is really quite strongly pronounced across a whole spectrum of different activities. So within our studies, we speak to businesses about how they perform tasks and activities, across a number of different scenarios in the different tasks. And if you look at this preference for digital, it's pretty much universal across the board. There are only 2 areas where we still see higher preference for non-digital channels. And in the UK, those 2 areas are advice, so when businesses want to access advice, and also when they apply for loans. The loan application, although some of this is obviously now taking place within digital or in digital channels, but there's often preference to consult through non-digital channels as well. And I think, one other important aspect here as well is, as you saw the adoption of digital channels increase and preference for those channels increase quite strongly. And also the aspect innovation has become really much more important for businesses in the UK. And I think, when they think about innovation, it's not just the potential of innovation to streamline the banking and make the bank easier, more accessible for them. It's also the potential innovation to improve efficiency within the business, deliver better productivity rates for the business as well. And so if we look at the headline number here, when we speak to businesses about the experience with the current primary provider, only about half of businesses are satisfied with the access to innovative market-leading products. So it seems, if you look at our data, one of the consistent themes emerging from it is that this aspect of innovation and access to innovative solutions is often a pain point across the board. And I think what's really interesting about this is that the satisfaction with innovation tends to be lowest among younger and smaller businesses. So as businesses grow, they believe that the access to innovative tools they have for the main bank is actually greater than smaller businesses. So it might be down to the aspect of accessibility, products offered to the different sizes of businesses within the market, or how those businesses are serviced. But the satisfaction with innovation, interestingly, tends to be lowest and substantially lower among smaller businesses. And the other reason why we feel it's important to deliver on those expectations of UK SMEs is that the switching among SMEs has been actually quite healthy over the last 5 years. So we can see that about a third of SMEs switching their primary provider, and those aspects related to digital capabilities, to innovation, we're really fueling the switching activity in the market. So 3 in 10 among those to switch because they wanted to have access to better digital capabilities, but also there was a substantial number of businesses switching because they wanted to have access to more innovative products, services, and tools for the provider as well. And now, when we move to the second aspect of this, so how this progressing or advancing digitalization has created this fertile ground for digital-only providers. The headline number here, it's around 2 million of UK businesses using those digital-only providers in 2023, and this is looking at the whole spectrum of UK, whole universe of UK businesses, so about 5.5 million as of 2023. It has increased over the last couple of years. It hasn't really been such a huge increase that we saw perhaps in the consumer banking space. You have these new breeds and types of providers coming into the market in recent years. A lot of the increase in the consumer space was fueled by buy now, pay later providers. If you look at the UK SMEs, the adoption is still very healthy, so about 2 in 5, 37%. But if you look at how this has changed over the last few years, there wasn't really, we haven't seen a huge increase in that sense. And when we look at the different types of businesses and different adoption rates of fintech providers, so I think interestingly, the adoption really peaks within the 2 to 10 million revenue bracket. That's where we see about 50% to 60% of UK SMEs using those digital-only providers. And when we look at tenure, it's the 1 to 5 year bracket where the adoption is also the highest. A similar level, around 60% of businesses using digital-only providers. And then if we move beyond 5 years, we can see a gradual drop in the number of businesses using those providers. If you look at the different types of digital-only providers that are used within the market, so neobanks, really the biggest group, we can see the adoption hovering around 1 in 5 or 20% to 25% mark, and steady increases over the last couple of years, so going from 16% in 2021 to 22% in 2023. The other types of providers, so we've put a spotlight here on payments providers and lending providers. Quite steady, I would say. We haven't seen a very clear trend. I think lending providers, we can see a small gradual increase in adoption, but it's really the neobanks that attract the highest interest. And among them, the likes of Tide, having around 500,000 customers. Starling Bank is also doing quite well in that sense. And Moz obviously also, probably leveraging its momentum and its brand recognition that it has among consumers. The position that was only launched, a couple of years ago, having already 250,000 customers as of May of 2023. So really big, I think, momentum, huge momentum behind those 3 brands in the space. And when we look at the reasons fueling this, obviously the number one aspect here is the general openness of businesses to bank digitally. If it wasn't for that, then obviously those providers would really struggle to break through. But because SMEs are quite content to bank digitally, that openness enables those providers to really break through. And the quality of digital banking services is the number one factor really fueling the appeal of those providers. So 32% of businesses quoting it. And the ease of application process is the second one. And I think that's a really important one because, when it comes to onboarding, there's always this perceived friction that we hear from SMEs when we speak to them. They don't think that the onboarding is as seamless as it should be, or as seamless as it is in the consumer space. And this aspect of onboarding, although it ranks in a second overall here, if you look at newer businesses, if you look at smaller businesses, it is really the number one factor for them, and as a reason that drew them to those alternative providers in the market. And the ease of use, I think that's something we saw also, correlated quite strongly when we look at the reasons why businesses gravitate towards digital services for the banking. It's similar here with digital-only providers. They do see them as alternatives that are easier to use, easier to apply with, offering better digital experience. So this digital aspect and the ease of use are really the two critical factors in that sense. We also know that one of the other important aspects businesses do look at is the access to additional tools. If you look at some of the pain points within the market among businesses, it's often to do with innovations, often to do with access to value-add services. A lot of those providers operating in the digital-only providers do offer those tools, either their own in-house tools, but they also have been really strong in terms of building partnerships with third parties to be able to offer those tools to their customers. And if you look at the appetite for different types, so fraud management, quite popular, accounting software, so we knew that's always really popular and then resonating well among businesses. Cash flow management tools, but the number one aspect here really is the customer loyalty, the CRM tools that the businesses can have access to. Maybe not so popular among the larger businesses, but if you look at the smallest of businesses, so those within the 0 to 500,000 revenue bracket, a huge services within that particular group. And I believe this will be the final slide here of content before I move on to the summary. So I just wanted to share why we believe fintechs are poised to thrive in this market. So the number one aspect here, I think, is the trust the businesses place towards different types of institutions. So we know the trust still really firmly lies with banks. It's the same really across consumer and business banking. If you think of banking, we think of financial needs. The instinct is to turn to banks first, and they perceive as stable and established providers. But the trust placed towards this new institution has been increasing quite strongly over the last couple of years. So we have the data here from 2021, 2022, so 2023. So we can see that the trust placed towards this new digital-only providers has increased quite substantially. Actually, what's really interesting is that if you look at consumers, they're actually they tend to trust less of those providers, but the uptake of digital-only providers is higher there. I think a lot of this is down to longevity of the providers operating in the consumer space. We see a lot of those fintechs and digital-only providers have been around for longer and they have longer runway to build that momentum in the market. But also the trust there is shifting. And one other, I think, important aspect is that when you look at how consumers make their choices, a lot of this is really driven by the perception of the bank, the reputation of the provider. It's less the case among SMEs. So when the SMEs decide on the providers and products to use, they're more likely to evaluate those products and providers based on the features, terms and conditions, as opposed to what they've heard of them. And I think this really creates, big opportunity for digital-only providers, because if the proposition is appealing, if they're able to present this as a unique and value add compared to what's available from traditional providers, they will be more likely to be considered by them. And one other thing here as well is if you look at what's driven switching in the last couple of years, a lot of this had to do with innovation. And it's also the case if you look at the next 12 months. So we can see that over 1 in 6 businesses are open to maybe, not necessarily will make that switch, but they are open to consider alternatives to the current provider. And if you look at what's driving this behavior, this openness to switch, a big part of this is really fueled by a quest for better digital capabilities, access to more innovative tools, more commitment to business long-term growth. And I think the reason why I believe this will help fintechs and digital is that there's 3 factors are really the perceived strengths of digital-only businesses, digital-only, sorry, providers, not businesses, apologies. So I think this is another factor here that's likely to support further growth of these providers within the market. So just to summarize everything, so if you look at the presentation overall, two parts of it. So first, the interactions with businesses within the market. We know that the momentum is firmly behind digital channels, and mobile banking is on the up. Businesses are really happy to be interacting for digital channels. It's only the advice piece that still requires and often produces non-digital interactions, but everything else has moved on to digital. And we know there's a huge quest and appetite for innovation within the market. We know that this is not something that SMEs are necessarily feeling the banks are delivering on the expectations. But if you look at a lot of the switching activity happening in the market the last couple of years, a lot of the dissatisfaction and the causes of it, a lot of this is to do with innovation. So there's an important aspect that should be recognized as an opportunity for the different types of providers really to leverage and to drive momentum. And if you look at the digital-only providers, so as we mentioned earlier on, we can see that about 2 in 5 SMEs do use those providers these days. It is really the neobanks that are leading the way, with about a quarter of businesses using them. And what's driving appeal of those providers in the market? So the two aspects to it really. It's the ease of onboarding, the ease of servicing, and the digital capabilities they have. Those are the top two attractions really and appeals of those providers, and what's driving the market share momentum. And they're really well poised to grow further. I mentioned some of those factors that we believe will fuel the expansion. A lot of this is to do with increasing trust, with the fact that businesses are more likely to consider capabilities as opposed to just purely reputation. And a lot of this also lies with the fact that a lot of the strengths of the digital-only providers are essentially the weaknesses or the perceived weaknesses of traditional banks as well. So that's going to be another factor here, I think, allowing those providers to be at least considered by businesses across the market. So I'll stop here. I open the floor to any questions. Just thank you once again for listening in.
Thank you, Hubert, very much. I absolutely loved this. I really appreciated the first few slides where there was some really good news around the increase on reliance in terms of reliance on digital channels. Good news for the banks, all the banks, I suppose, and also how we are capturing the future trends and the appetite and how that is increasing. We have a question here from Tim asking, should we then be investing effort and money and focus on the mobile channel beyond the rest? What do you think?
I think yes. I mean, I don't think we're in a position yet that the mobile will fully replace online in SME. I think we're getting there in the consumer space, but not so much in SME space. So I think it's important to make sure that mobile offers similar capabilities. But I think also recognize that probably if you look at SMEs, they do use online for often different functions than use mobile. So mobile, checking transactions, the easy day-to-day interactions. Online is often used for more sophisticated tools. And I think, as you build your mobile capabilities, one thing that's really important to bear in mind is that businesses use mobile for convenience, speed, and you don't want to compromise it. So yes, by all means, invest in mobile, but do recognize the continued importance of online banking and the fact that, businesses don't really migrate away from online. They do increase the adoption of mobile, and there was, a very small decrease in the uptake of online banking. But if you look at, how many businesses still use online on a monthly basis, that's pretty much 100%. So yes, do invest in mobile, but do not lose sight of the fact that online is still widely used, and online is used for very specific interactions within the market.
Thank you, Hubert. And you briefly touched upon the the type of tasks that our mobile banking is being used for. Could you just give us a little bit more of a color on what are those tasks?
I mean, obviously, it would depend slightly across different businesses, different sizes, different industry verticals. But, mobile, you see, it is being adopted more universally across a broader array of the different tasks, but it's to do with more transactional aspects, the checking of transactions and making sure everything that, is coming through, monitoring activities. So it's the more regular interactions, and I think that's why we're seeing an uptake, an increase in the uptake of mobile for the weekly interactions, daily interactions. So I would say, I don't want to call them the more basic activities, but often, yes, the more day-to-day banking needs, monitoring of accounts, monitoring of transactions, making transfers, and then more complex activities that would still lie more firmly with online.
Thank you. I also really liked how we can see the shift in trust in relation to fintechs. Finally, that used to be a consistent barrier for all the fintech providers, and we're seeing that shift happening because of the longevity for many of those. All these good news that obviously come with the challenge that we are presented with, which is you talked about switching being driven by the need for innovation. Customers are looking for innovative products. Could you tell us? You touched briefly on the differences between consumers and businesses in terms of how they go about choosing a bank, and that's really great. But in light of all of that's happening, where does the branch sit, and is this still an important channel? And how does this complement the need for innovation and the uptake of digital channels and so on and so forth?
It's a very good question. I think, obviously the branch experience and expectation of branches have been evolving over the last decade or so within the market. I think branch still serves certain purposes. I think, branch is probably still, a sign of a provider. It does more to what business and consumers think of the bank as opposed to the utility of having access to it. So I think, if you look at just purely SME space, I think, some aspects of advice still there, obviously cash transactions to an extent as well. So it is still important. Obviously businesses as consumers are moving away from branches, but I think, they still see them as valuable element of this overarching holistic channel experience they simply expect the banks, traditional banks, to provide on as well. But it's, if you're a bank, obviously it's often how you want to leverage the branch presence that you have. You have businesses coming with simple interactions. Obviously, it's a good space. It's a good opportunity for you to use these interactions to just convey that this task can now be completed digitally, and it serves both ends. Obviously, it helps you reduce the traffic and the need, but also, it helps businesses to manage the banking more efficiently as well, which is important to them as well. And you mentioned the aspect of innovations. The number of different things here that we should consider is innovation of channels, and that helps businesses to conduct the banking more effectively in a more streamlined way. But there's also this whole spectrum of additional tasks, additional to your SME client, which is important to them. If you think about this second part, really, we know there's a big appetite for the tools over there, but we also know that this is a really good way for you to create this perception that you dare to support the growth of the business as well. So when we had the first series of this round, when John was speaking about some of the unmet needs of businesses, a lot of this had to do with the perception of banks not being there for SMEs, not being really committed to long-term growth. If you look at the innovation, I think it's one of the good gateways for banks to build that perception and to offer something to businesses that won't be just simply seen as a tool to manage the banking, but it will be seen as something that will help them grow, increase productivity, and so on.
Mm-hmm. Thank you, and it's really great to see some of the successes amongst the neobanks. You mentioned Tide, Starling, and Monzo.